Hello and welcome to Pro Indicators website. In this quick video introductory, I will describe you what the Pro strategy is about in simply a few words. Of course, we're going to enter in much more detailed scenarios on further videos and educational content I will provide all along the way throughout videos in here and both the TradingView website. So here I'm simply going to tell you what this is about. These indicators has been designed to be a couple. They will complement each other and give pretty reliable trading signals. But of course, you're not going to trade out of a single indicator information, neither combining the two. This has to be included in an overall strategy. And I made all I could to make these strategies rules as simple as possible. And this is what we will talk about in that video. The strategy will be a three-step strategy, which you have described on the top left bottom, on the bottom left corner of that chart. And the first step will be to check the sentiment / context on the higher time frame, which means you're going to make a simple technical analysis of the market you're about to trade, but on the higher time frame. As for example, in here, we are watching the Bitcoin on the H1 time frame, in which I've been putting some buy and sell signals. And of course, before trading any of those signals, you would have needed to make a daily chart analysis, very quick analysis, something you need to perform in less than 2 minutes, simply assessing whether the market is in range mode or trend mode on the higher time frame. And of course, if you are in a trend, you don't trade against that trend on your local time frame, which means if you are in a bearish downtrend on the daily chart, you simply avoid trading the bullish signals and only focus on the bearish ones. The bullish information cycles will simply trigger taking profits or exits on the bearish trend. And of course, if you have a bullish trend, that's the opposite. And if you are in a range mode, you can take both. It's simple as that. Then you have to call what I named the technical framework. It means that you cannot trade bear signals out of nothing. You really need to have a plan, a scenario. And that scenario cannot rely only out of the indicators themselves. You need to have something else, something technical. And at that stage, there is nearly eliminated possibilities. You can use Ichimoku, you can use, for example, Elliott waves, as I currently do. But as you see me today, I might use something different in 6 months period, for example. I was using something different 6 months back from today, and I will probably use something different in the next following 6 months. So the technical framework is something that is very personal. You need to build this. I cannot give you a ready-to-use scenario in here. It's basically going to be different for each and every different person. So find your own technical frameworks. The possibilities are endless, but there are major ones you can put efforts on. If you don't know where to start, simply start at the easiest possible way. Learn how to trade using trend lines or horizontal support and resistance level, simply applying the Dow strategy. Higher high means a bullish market, lower low means a bearish market. Simple as that. This step doesn't really have to be complicated. It only needs to be there in order to format your mind, create a mindset that you'll be able to follow through the scenario. Okay, it's only there to create a mindset. This is the only reliable information you need to take out of step 2 before trading. And then step 3 is triggering a trading signal, and this is where the indicators step in. And the signals of the indicators themselves are really easy to plot. They will not be 100% reliable. Remember, the goal of an indicator is not to tell you where you buy and where you sell. It's only there to tell you that the risks are limited to buy and limited to sell. And then you act, of course, and that doesn't give you 100% chances to give a gain. It can end up in losses at some point, but the indicators have been designed to be with very complicated algorithm running in the background and giving really simple informations to take out of them. So really complex thing happening in the background, so you don't see any of it. I cannot reveal the algorithm because it's really way too complex. A normal human being wouldn't be able to understand what's going on in here. So that's not for the purpose of secrecy or something like that. It's just that you really wouldn't understand what's going in the background. It's searching and triggering into nearly 500 patterns. So instead, the only solution for you would be to learn those individual 500 patterns, which would be really too complicated for a normal person. So consider those indicators as a very simple thing. It's like having me always watching over your shoulder with my 500 patterns that I've been learning throughout my years of trading and my experience as a trader. So it's simple as that. It's me watching over your back and making sure you're not doing something stupid here, and only making sure that the risks and the odds are in your sides. And of course, that doesn't mean you will end up in gains every single time. Trading is not about that. It's only limiting the risks and trading safely. And this indicator will really help you that way, because they will help you having confidence in your tradings and in your trades. And of course, this has to be combined with the first two steps. If you skip one of those steps, then the scenario is not decently built, and so your trade will be with less quality, and of course less quality leaves an open door to risk, and risk is what leads to potential losses. So now, in order to finish that video, I'm going to give you a simple, quick few examples of possible trades, and then of course we're going to review that in much more detailed scenarios later on the further educational video you'll probably see after this one, if I caught your interest in this. So for example, in here is the Bitcoin on the H1 time frame in a time period where the signals were really clear. So of course I'm taking something that you will easily understand and trade out of, because the signals are really clear and easy to plot. So those buy and sell signals have been put whenever you had a double signal from both sine wave and momentum. Those signals are really simple. What you want to see is a red triangle, and then when you have a red triangle, you have to go back then and read what the previous signal was. Okay, so for example, on that red triangle, you go back in time, the previous signal was a taking profit pattern, a bullish taking profit pattern, and the previous one was a bearish signal. Okay, so at that point, at that stage, on that red triangle, you know the market is probably triggering taking profit from the bearish trades, which means you could very well have a little retracement pattern going on in here. And then after doing this, you simply have a look at what happens on momentum. And you see if there is some kind of momentum confirmation that could eventually trigger a trade. At that point, you have nothing like that. You only have sine wave giving you that red triangle, but momentum is not telling you anything. So you don't act. Whenever you have simply one indicator doing something not confirmed by the other, simply means that there is not sufficient odds for you to trade. You simply wait. Waiting is the best option when nothing is reliable to trade. So you just wait at that point. And then you have that blue triangle. Okay, so for example, in here, I haven't put the signals because I will do it in real time in front of you. In here, you got that blue triangle, and you got the taking profit pattern out of momentum, which means that right here, both indicators are confirming each other on a potential bullish reactivation pattern. So for example, right here, you could have bought the market. Why shouldn't you buy this? Because in here, for example, the daily chart would have been bearish trendy, which means that you should have avoided trading that bullish signal and shouldn't have bought the market in here. Okay, you should have simply waited in here, because bearish trends mean you're not buying the market. You avoid entering counter trend unless you are very experienced in trading and you have at least 3 to 4 years of trading, and then you can consider eventually making counter trend trades. Otherwise, simply wait. Waiting is the best option 99% of the time. When you act, you need to be in control. You need to have checked the 3 steps of the strategy before considering pushing the buy or sell button on your trading platform. Okay, so for example, in here there was a buy signal, but one you should have ignored because of the first step strategy. Okay, let's take another example, the one you could have traded on. You see sine wave is reversing bearish right here. You got the red triangle, and then a few bars later, you got the momentum confirmation in here with that red dot. I'll tell you what that red dot is on momentum specific video, but that is a confirmation signal on momentum. So in here, you have red triangle, momentum confirmation. You can trade safely bearish. Simple as that. If you are an interesting price area out of your technical framework analysis, if you identify that price near a potential resistance, you have a bearish double signal, you just take that trade. Okay? It's simple as that. You go bearish in here, you sell, the market is going down. In here you got exit pattern, blue triangle, not confirmation from momentum, you simply do nothing. You lower your stop loss to break even price, and you wait for the market to make a decision, whether to give you a confirmation on sign on momentum and breaking a resistance, or going downward as it did right here, triggering another blue triangle in here, still no momentum confirmation. And there you have it. You've got the blue dot right here, the blue triangle. Here's the price you exit the trade. And eventually in here buying it, because the pattern, the sine wave pattern is an exit pattern. An exit pattern means that if you trade it downward, this trend is very likely to end in here. It means that you're taking your entire profits and eventually consider going on the opposite side if you're an aggressive trader or an experienced trader. Okay, so out of that very educational example, of course, some situation will be more tricky, far more tricky than this one, but of course, we will review them, okay? But I want to get you into trouble in that introductory video. Now, I encourage you to have a look at the other video to understand what the indicators, the individual indicators are doing, how they are plotting the signals, what those signals are, and of course, in the educational section of that website, you'll see a lot more video, much more detailed, in much more tricky situations, of course, because things will not obviously be simple all the time. Goodbye, guys, and I hope I caught your interest on this.